Hello, welcome. Thank you guys for joining us today. My name is Melinda Mergelsberg. I'm a partner with Kaufman Rossin, and I'm honored to be here on behalf of the family law section and just really grateful for the opportunity to speak with you guys. Today is being done live, so if you guys have any questions as we go, please feel free to write them in the comment section of the post so that I can go ahead and address those at the end. I'm going to share my screen now, and we're going to be talking about using a tax return in preparing a financial affidavit. I don't know how many of you have seen the TikTok meme, how will they know? Well, you're going to know how to prepare a financial affidavit from your client's tax return. So let's go through this. So first of all, we'll talk about the value of a tax return in, again, preparing the financial affidavit. The fact that tax returns are filed under penalty of perjury. What we can learn from a Form 1040, which is a U.S. individual income tax return. What we can learn from business tax returns, the differences or some differences between the entity types, and the search for perks. So how does a tax return help us in a divorce? Well, it allows us to see the existence of certain assets and liabilities. So we can work on preparing the asset and liability section of a financial affidavit. It also helps us in preparing the equitable distribution chart. A tax return also shows us and helps us to determine the income that's available for support in calculating alimony and child support. Income tax returns really are a valuable source of information. We're able to identify amounts and sources of income, amounts and sources of expenses even, ownership interests in corporations, in partnerships, in trusts, bank and brokerage accounts, real estate investments, pension and retirement plans, and even tax refunds and liabilities. Like I said before, tax returns are filed under penalty of perjury. So that is an important piece of information to bear in mind when analyzing these. As we know, not every tax return is really, really clean, and some of our clients' business entities may have what we call perk income. And so it's good to know that tax returns are filed under penalty of perjury, that there is federal tax law that carries weight with it, and it's an important thing to keep in mind as we go through them. So a U.S. individual income tax return. I know everyone says that we all hate to pay taxes and we hate to do taxes, but they are a necessary evil in our world. So there are a lot of schedules that have a lot of information for us. We have page 1 and 2, schedule 1. Actually, there's now these 3 schedules that get attached to pages 1 and 2. There's also schedule A, B, C, and D, and E. And in the back, there are sometimes listed carryovers. So let's go through those one by one. On page 1 of a 1040, you'll find on line 1, wages. So we know a lot of our clients can get paid with W-2s, and they're an employee of a company. They may receive commission income or bonus income, and then their regular salary. All of that, if they're paid as a W-2 employee, would be reported on line 1 of the 1040. They'll also maybe receive interest and dividend income if they hold any assets in a bank or brokerage account that generates interest or dividend income. And that would be found on lines 2 and 3, and also further detailed in Schedule B. So we'll go through that in just a few minutes. Line 7 shows us any capital gains or losses that are reported from the sale of any assets, any capital assets. And then on line 8, we have other income, which is really detailed out on Schedule 1. Page 2 of the 1040 breaks down the total taxes that are due on line 12B, the total taxes that have been paid, whether those amounts have been withheld from a standard W-2 payroll withholding, or if they've paid those in periodically through estimated tax payments, or if they had an overpayment from the prior year that was applied to the current year. Line 20 will show us any tax overpayment and whether or not that amount is applied to next year or if it's being refunded. You can also look here on line 21A and B to see if this is an account that you've never seen before or never known to have been disclosed. So it's just a nice way to check the information. And line 23 tells us if there's any tax that's due. Schedule 1 of a 1040 really breaks down this additional income and other income. So we see if there's any alimony that's been paid or received by the party, and you'll find that on either lines 2 or line 18. If they have any business income, and that'll be on line 3 or Schedule C, and that's for a sole proprietorship. If there's any gambling income, which you'll usually see on line 8 listed as other income. And then if they have any flow through business income or flow through trust income or any real estate that they own, that'll be on Schedule E. And so you'll see on line 5 if there's anything that you'll find more detailed out on a Schedule E. Line 16 tells us if they have any self-employment income. Again, that usually relates back to the business income that would be found on line 5 or on line 3. And if they had any retirement plan contributions. If they contributed to a retirement plan, but your client hasn't told you that they have a retirement plan, it's definitely something to follow up with your client about. And you'll see that listed on line 15 or on line 19. Schedule 2 of the 1040 tells you what kind of taxes you have to pay. So you may have to pay self-employment tax, your client rather, and your client may have had to pay some net investment income tax, and that'll be on line 8. Again, just something to be aware of when you're working on preparing the financial affidavit. Schedule 3 tells you if there's any foreign tax credits, which you'd see on line 1. That would indicate that they may have either a brokerage account that holds some foreign stock or foreign bank accounts. And so you'll want to just follow up and make sure again that you've kind of captured all that information from the other items that they've provided to you. And line 9 would tell you if they made any tax payment with an extension. If it's before or after the date of filing, that may help you in determining whether something may have a marital or non-marital component. So Schedule A, this is an itemized deduction schedule. It breaks out if you get any special, if your client gets any special deductions for paying certain kinds of taxes, for paying mortgage interest, if they have any medical expenses or charitable contributions. These are all detailed out. Again, this is really helpful in establishing what the expense side of a financial affidavit may reflect. So I love to review Schedule B because it really helps me see if I have captured all of the different bank and brokerage accounts. A number of times you may even see interest income that somebody's received from a note receivable. So a client forgets to tell you that they loaned their great aunt 500 grand and you see that they're receiving some interest payments. And that will help you establish that there may be another asset out there that's generating this kind of income. Schedule C is where a sole proprietor would indicate any profit or loss from their business. So they'll list their gross receipts under Part 1 of the income section of Schedule C, and they'll list a variety of expenses. Line 27A is called Other Expenses, and there will usually be a secondary schedule or a statement which details out all of these expenses. You'll want to review these expenses in detail to determine if any of these are more perk type income, and ask some follow-up questions about those. Schedule D reports any capital gains or losses on the sale of investments, of property, of other capital assets. Depending on your client, these may be considered recurring or non-recurring income items. And again, you'll want to ask the question with your client to get a better understanding of what type of income, how often they realize this kind of income, and what their level of involvement is in generating that income. Schedule E of a 1040, so there's 2 pages. Page 1 details out any rental real estate income that they own in their own name or through a single member LLC where they're the sole owner. So you'll list out all of the property addresses, and you'll see what kind of income they get and then what kind of expenses. Page 2 of the Schedule E breaks down any income from any flow-through income from a partnership or an S corporation or an estate or a trust. So you'll want to really read the statements because you'll be able to determine if there's any other type of entity that your client may have an ownership interest in it. And really, once you get this, so here's page 2. So you'll see on line in part 2, any income or loss from partnerships and S corporations. So the various entities will be listed in line or section 28. And the income will be detailed out as either passive income or loss or non-passive income or loss. Sometimes they have a lot of business interests and it'll say statement 25 or something. And you'll want to go to the back of the tax return and make sure you read those statements to understand whether they still have the asset or not, whether, and then what kind of entity it is and what kind of income there is being reported to them. I would highly recommend getting a copy of that business tax return because the business tax return is going to detail out any kind of income or expenses for the business. And you'll want to read the statements on the business return as well to determine what kind of perk income may be flowing through those business interests. Part 3 of page 2 of Schedule E shows you any income or loss from estates and trusts. And that's, again, another way to understand what kind of income does your client receive. So we've talked a lot about businesses. We know that there's a C corporation, which files a Form 1120. There's also an S corporation, which files an 1120S, and a partnership entity, and those file a Form 1065. Again, the tax returns really do have a lot of information. Business tax returns will show you who else has an interest in the entity. It'll help you establish whether there's other entities held within those companies and really allow you to dig deeper into your client's financial picture. This is a quick little spreadsheet that gives you some of the differences between the entities. So you have a corporation. The owners of a corporation are called shareholders. They file a shareholder agreement. Their interest is either in stock or shares of the corporation. They generally have limited liability, and they file either an 1120 or an 1120S. And the payment to the shareholder is either through a dividend for a C corporation or through distributions for an S corporation. And we detail out here just for all the different types of partnerships and for sole proprietorships, just to help you in figuring out what kinds of documents you need to get and to understand what kind of income your client may be receiving. If your client's an S corporation shareholder, you'll want to make sure you understand what kind of distributions your client receives in addition to the salary that they may receive. So the search for perks. In a business return, you'll want to look at line 27, which is called other deductions on an 1120. And on form 1065, you're going to want to look at line 20, which is for other deductions. So these generally refer to statements for additional detail. And you'll be able to see if there's meals and entertainment being paid, if there's really high office expenses, if there's really high independent contractors or janitorial services, really high auto expense, if there are telephones being run through the business, if there's management fees being paid to other people. Once you understand if any of their personal expenses are being paid by the business, you'll want to speak with your client to determine what percentage is paid by the business. Maybe only a little piece of it is, maybe they're just reimbursed for only the business portion of the expense. So you'll want to talk with your client, get a much better sense of what they are having being paid by the company so that you know what to include as perk income. And then of course, request a copy of the general ledger for better detail. Sometimes I've seen clients miscode information and miscode payments and call it cost of goods sold, as opposed to the other place where it really belongs. So just make sure you're doing the follow-up questions and checking in with your client to go ahead and get all the detail that you really need, so that when you're putting together the financial affidavit, you're presenting an accurate picture. Because again, they're signing the financial affidavit under penalty of perjury as well. And that's it for this portion of the conversation. I hope that you please bring your questions and let's talk some more.